Hello and welcome to Property Trading Webinar. My name is Salesh Chand and I'm a chartered accountant in public practice. Today we'll be talking for about 1.5 to 2 hours, depending on the feedback we get from you guys. So format of the day, it's pretty casual, so feel free to ask your questions, type it in, and we'll answer them as we go. We'll also stay back and give you an opportunity to ask questions right at the end of the presentation and we'll try and answer them as many as we can. We'll also run live examples of our property trading strategies, what we do, and what are some of our supply chain, and how we help our clients as well. And hopefully, we'll try and entertain you for the next 1 to 2 hours, depending on the feedback we get from you guys. So, just before I proceed any further, I just want to make it clear that I'm a chartered accountant. I'm not a financial advisor, so I cannot give you any financial advice. So, if I can just leave that up there for 5 seconds for you guys to read. Um, yeah, so I can't give you any financial product advice or anything like that. As I mentioned, I'm a chartered accountant in public practice. I'm also an active property investor, so I buy and hold investment properties. I do cash flow investing, so properties that are cash flow positive, and I also do land banking assets. So these are basically properties that I buy with large land at the back that I can build on later in the years to come. I also invest funds into trading activities, and this is what tonight is about, where we buy properties, do them up, and on-sell them for profits, or we buy properties, demolish the existing house, and build multiple houses and also on-sell them for profits as well. And will show you the kind of margins we make on this trading activity. I'm a partner here at GRA, so I've been a partner since 2012, and currently I have 18 years of accounting and property investing experience. So I've been around for a long time. I've been focused from my early 20s investing into assets. Currently in the whole portfolio, we have over 60 rental properties. So these are our whole properties. We're not selling them. And majority of these assets are generating cash flow positive and they're land banking assets. If I subdivided these assets, I'll probably end up with 300 sections. So, but not interested in subdividing. I'm interested in just holding them for long term. Also, we are building 17 new brand new houses at the moment, and we're hoping to finish them by February or March. And then we have another 5 standalone houses to start. What we've noticed in the Auckland market, there's hardly any good development sites available. Everything's selling fast. So the market is lifting, guys. Um, just a quick background about GRA and who we are. So GRA is an accounting firm in Newmarket, Auckland. We specialize in property accounting and business accounting. Um, our core strength is making sure our clients' assets are protected. So this is what we call asset planning, making sure that your business, your family home, and any other expensive assets are secured for your kids or for anyone else that you'd like to inherit the property. And when we say we'd like to secure the assets, we like to secure them from creditors. We also tax advisors, so we give you specialist tax advice and we customize your tax advice and deal with any ID issues as well. We do normal accounting work, basically your tax returns, your GST returns, and any other compliance work that we are required to do, PAYE returns, and tax planning and providing financials to the bank. Um, as being part of GRA, you also get access to insurance brokers. So we got landlord insurance, and we've also got Risk Direct, who are our insurance providers for health and life insurance. Um, and and being part of GRA, you also get access to mortgage brokers, and one of them is speaking tonight, Chris Peterson Mortgages. So he will talk to you about his products and some of the new products that are out in the market for a very limited time. And some of these products are massive cashback if you refinance, right? And Chris will talk about this further. Um, and also interest rates, how you can use the banks to negotiate your interest rates. And we also do property education, so that's one of our biggest strength at GRA. We provide you with property education, and the reason we do this is because we like our clients to learn about properties. Our client base is quite old, and most of our or matured, I'd probably say, and most of our clients are either mum and dad property investors or business owners that invest their profits into properties, or we've got basically sole traders or anyone else that like to take their money and put it into properties because the advantage of property is it grows in value over a period of time. So those are the people that we attract, and it's worked well for us and for our clients as well. If you'd like an initial meeting with GRA, so this is a meeting with one of our consultants. We do free meetings for our new clients, restructure review meeting. We also discuss things like asset protection, tax planning advice, and accounting services. Now, if you'd like a meeting with GRA, please scan that QR code and fill out the form, and Amy will get hold of you. Now, you can also email Amy, and she'll organize a meeting time for you as well. Now, guys, this is a market update and it's more towards property traders, what's happening out there. Interest rates is coming down. Now, I've been putting bets all day today that I think there's another drop coming in February. Interest rates has to go down, and I'll explain why. Yes, some of the businesses are doing well. They've just started doing well, but there's other businesses that are struggling, and families are struggling. So interest rate has to come down, and the reason everyone is struggling at the moment is because interest rates went high earlier in the year or last few years. It was really high. So interest rates need to come down further. I reckon there's another 0.25 basis drop coming. And so we'll see in February that there will be a drop. Um, what we've noticed is new buyers are qualifying for home loans. Now, these are investors, these are first-time buyers, and they're qualifying for home loans. So this is good news, right? And credit is getting so much easier to get. There's so much money floating around between the banks at the moment that they're calling people just to lend money or give you facilities, like overdraft facilities or offset facilities, you know. As a result of this, what we've noticed is market is lifting and it's a good time to trade. When the market's lifting, it's going up. This is when you start buying and trading stock. And at the moment, the auction rooms are booked. Do-ups are selling for the same price as done-ups. This is what we've noticed in the market. So market's doing really well at the moment. Now, if you're a property trader, very important, like seriously important that you keep an eye on your GST status. We've over the years we've helped a lot of clients get out of the GST mess. Now, when we say and make a note of this, a GST error could be could cost you 150 to 200 grand. It's not a small amount of money, it's a big amount of money. So it's very important you talk to your accountants or your tax advisors, or you get someone like GRA to review your sale and purchase agreement if you're a trader and you're unsure about the GST status on the contract. You might as well pay someone $500 and get proper advice on it than sign a contract and lose 150 to 200 grand, right? So very important. Get a second opinion if you're not sure about the GST status. Um, what we've also noticed is property traders are back in the market. A lot of property traders out in the market and they're buying in numbers, they're doing up properties and on selling them. So we'll give you examples of that later in the presentation. Now, guys, this is the auction room. So this was the auction, and the photo on the left is in February 2023. I took that photo, right? That's the one on the left. And the photo on the right is October 2025, only recently, like 6, 7 weeks ago. And it's a full house and people were standing everywhere. And that's how many buyers are in the market. Now, recently, just around the corner from my house, there was an open home and people are lining up to view the house. So the market's picking up, guys. Everyone's getting their funding in place. So it's going to lift up. So if you're a property trader, it's probably now is the time to chase some good deals, buy them, do them up, and all sell them next year. Well, I mean, prices are not going to lift up faster, but it is lifting up. So it could go up 5 to 7% next year, you know. And if you've got more than two bidders at auction, they could probably end up paying 20 or 30% more for the property. So that's what we're seeing in the market at the moment. So a little bit of story about myself and how I got started in property. 2007, I started at GRA as a graduate accountant, and I had 47K of debt. And that 47K of debt was I had student loan of 30 grand. I borrowed 16 grand to buy a black Ford Falcon, and then I spent $1,000 putting meg wheels on. Nowadays, megs are about 5 grand. So back then, it was a grand, I could put four megs on. And so I did that. So I ended up with 47 grand debt, as coming out of uni. So, feeling quite loved and special, saying I'm going to make lots of money. So why not spend this? And this is when I met Chris Pedersen, KPM. So KPM is a mortgage company run by Chris Pedersen, and he'll be joining us shortly. Um, He's at a presentation today, so he's trying to finish that to join us. So in 2010, I bought my first property. And the reason I bought my first property in 2010 is because I started hanging around and liaising with people who are in properties. They're buying properties for long-term investments and things like that. So I started doing the same. And KPM, Chris Peterson Mortgages, helped me get finance on this property. And fast forward, now we are in 2025. Our current portfolio is over $50 million in property assets. Now, our property assets are not all properties, right? I can tell you it's probably 1% shares, and probably about 25% cash. And you can say probably about, 60 something percent, or probably 70% sitting in properties. So, the portfolio does have a lot of cash as well. So that's our portfolio. And this is why we can go through a recession and survive because we've got money in the bank account. We don't need the banks. We can fund our own transactions through our own cash flow and the money we have sitting in the bank account. So that's how big the portfolio has gone. And we manage everything on our own. We have social housing contract and things like that. But I can tell you this now. In 2010, when I bought my first property, I was 26, right? And in 10 years' time, sorry, in 4 years' time, from 2010 till 2014, I made enough money turning 30 to retire. Now, the reason I didn't retire is because I love properties. I love talking about properties. I love banking. I love how all these things work together. So I'm a big supporter of property investing and using the bankers to our advantage. And Chris Pedersen today will show you some of the tricks that he can do to get you funding and cashbacks. Now, cashbacks are really important, right? So we need a guy like Chris to help us do that. Now, guys, I'm going to show you a couple of my projects that I'm doing at the moment and the kind of margins that we make. So this is an example of a property we're building in Parker Avenue, Near Lynn. We bought the site for 1.89 million, or 1.85 million. That's our land cost. And we've got 5 dwellings we're currently building. It's just about to be finished. Our total build cost is about $2 million. And our total cost will be 3.9. That's including land and build, right? So market valuation has just come a little bit above 5 million. And so our pre-tax profit is about 1.1 million. We are going to sell the site, unless we get a massive social housing contract, then we'll have to pull it out of the trading activity and hold on to it. But the intention here is to sell it. And every real estate agent that's been through the property, they're impressed with the size of these townhouses. We've made them quite big, and you can see what the inside's looking like. We're still working through it, but it's a beautiful modern home. It's close to all the infrastructure. You've got your mall down the road. You've got your car parks. You've got your schools, everything. It's 15 minutes drive to Auckland City. So it's a fantastic. Now, this is a simple trade I did in Rotorua a couple of weeks ago. We bought a site for 600 grand. We spent about 110 grand on it, so it was about 710, and we sold it privately for $900,000. So we made 190,000 profit on this. Now, what did I say earlier? It's a lifting market, right? Get in there and start looking for sites. It actually works. $190,000 profit is a lot of money, and it's a lot of effort. So to earn this kind of money in wages and salaries. So the reason we can achieve and do things like that is because we have the right banker, the right lawyer, the right accountants on our side, right? So we can go and transact all the time. So, guys, there's profit to be made on small transactions as well. You don't need to do big transactions to make big profit. On small transactions, you can do as well because these are entry level properties and there's lots of buyers chasing properties like this. So, this three essential ingredients for trading. This is really important, guys. This is proper, you've got to have the right property accountant / property tax specialist. And this is GRA. We are the property accountant and property tax specialist when it comes to your holding your assets. There's a long-term rentals, your trading stock or anything like that. We'll help you structure to ensure that you've got asset planning in place, your deposits are protected, your equity is protected, and your banks are protected. Right? So we'll design a structure that works for you and also zero-rated transactions. If you ever hear the word zero-rated transactions or GST, right, and you're not sure about what you're signing, get an accountant to review the documents. If you send it to someone like GRA, we'll spend half an hour reviewing it, giving you an opinion on GST and zero-rate transactions to ensure you don't lose money. So if you are unsure, just get one of the accountants, pay for it, and get the right advisor in place because you could lose 150 to 200 grand. So really important. You also make sure that you have the right lawyer acting for you, right? If you don't have a right property lawyer that acts for you, you're more than welcome to contact GRA and we'll guide you through to a proper lawyer who will help you understand your property transaction. Now, a good property lawyer also understands the loan documents that your second tier or your first tier funders are not trying to secure your business or your family home into the transaction as well, because that's dangerous. If anything goes wrong, you could lose your family home. So we need a good lawyer in place. Now, the last thing is the great mortgage broker. And we've got Chris Peterson coming on today, and he'll be talking about mortgage broking. I think, Chris, you're on. Chris has just arrived. There we go. Chris has arrived. He's sitting in a car somewhere, I presume. Oh, you've disappeared, Chris.
Oh, can you hear me?
Oh, yeah, you come back on. Yes, we
Can
can,
you?
mate. Yeah,
Sorry,
He,
I'm
li-
I'm
so
I'm
he looks like
I
some dodgy salesperson at top of the
I don't
day.
know. I'm in a little boardroom in Christchurch.
uh,
I'm at a little event down here, so I've run out to talk to you guys.
fantastic. So a little bit of introduction here, guys. Chris has some amazing products to talk about, and these products are only available for short term. And make use of this guy, abuse him, and get as much information you can out of him. And I'll hand you over, Chris. You can tell us about your products.
Thank you, mate. Well, firstly, I'd say it's interesting being down in Christchurch and talking down here. It's like going to a different country, Sal.
Yeah.
Everyone's positive, everyone's transacting. It's a bit different to kind of some parts of the North Island at the moment.
Yes, because of the tourists, isn't it? So the tourists are coming in and spending some serious dough.
Yeah, I've just been talking to some Christchurch real estate agents down here, and it's just it's like going to a different world. They're all positive. They're all tired from like having to like doing so many deals. That's quite interesting.
Yeah, yeah. I think you
So
need to call Luxon because he's fired all the government staff in Auckland and Wellington.
yeah, exactly. So
Go for it,
hello
mate.
everyone, and apologies. I'm not used to doing Zoom off my phone, so I come across the wrong way. I'll apologize now. Um, how do Fan? Do you want to move the next slide? Sorry, I don't even know how to do this off my phone. Cool. That's yep, done. So I suppose quick and dry me. For those of you, quite a few would have heard me probably previously, is I suppose my background starts about a quarter of a century ago when I was at university and not knowing what I wanted to do, got stuck into property. Actually saw Matt Gilligan at an event, probably literally the best part of a quarter of a century ago, and got stuck into property. Then realised that I was much better with a calculator than renovating, and I've been working in some shape or form of finance ever basically since. I'm going to talk pretty quickly because I've got to get back into this event tonight, so excuse my brevity. But Fan, do you want to move to the next slide? So a few things I'm going to talk through. I know this may not sound like it's completely relevant to property trading, but there's a little brief period of craziness around bank pricing that I've not seen before. And so Sal and I were talking about this a few days ago, and it's at least worth a bit of a chat. So cash, for those of you who maybe have mortgage debt but maybe haven't spoken to your banker or negotiated with your banker for a period of time, one big change that's basically happened is the banks appear to be negotiating more on cash contribution than on interest rate. So if you remember, though, you probably go back a few years ago, what we all basically used to see in regards to interest rates is that you'd see standard rates, then you'll see discounted rates, and then you give your bank another bit of a nudge, and then you'll get a bit of a discount off that. And a lot of the bankers have now pushed the interest rate negotiating onto apps, which means they're not moving there. And so more of the negotiating is happening around cash contributions. So these have been in around one shape or another. And this is a bit of an example on the screen now for a deal I did a while ago now. But this was oh crap, I'm going to go in 5 minutes. Sorry. So I'm going to speed this through, but this is kind of an example of cash contributions which have been done, and the banks have been offering 0.9%. What suddenly happened? Can you move to the next slide, Fan? Sorry, I'm going to have to speed through this. Is banks have suddenly basically come out with 1.5%. So if you look at the left, so the one on the right, sorry about the slide, this was a offer I got a few weeks ago for just under $1.9 million of debt. And the ASB offered me 19K. Now what's basically banks are doing up to 1.5% of cash, which basically means they're doing 28,000. Now, at the moment, for those of you, you're probably going to run out of time if you try and get this in prior to Christmas because most of them are looking to pull the offers prior to Christmas. But it's worth keeping an eye out if you've got fixed rates coming up. because there's always a chance that they basically reignite that in the new year. And, I'm a massive proponent of GRA. I think obviously everyone's talking about property trading. You're going to be getting into loan structures and all that, or ownership structures basically tonight. That might mean that you need to move some properties around or restructure some of your debt. Use these bank cash contributions to pay for it. This is one of the big things we do with GRA. You might look at it as a cost. Often what we do when we're working with Sal, Than, the Maggie and the rest of the team, is basically we can often get the banks to provide these cash contributions to do it. So apologies, I'm going to have to be pretty quick, but one of the big things we do with GRA is expanding the one bank trap. And I won't just skip forward a couple of slides. Sorry, Sal. Won't get into that part now because of time, but keep going. Yep. So this is one of the things we do with, I suppose, trade properties, which is a little bit different. So generally when we're looking at buy and hold, we're trying to minimize the deposit we raise from the family home and maximize basically the debt on the buy and hold property. Often what we do for a first time trade looks a bit unusual, but there's a method to the madness. So let's say you're starting off with a personal home. This is property on the left worth $1 million and you've got a 100K mortgage on it. And you're buying this trade property for basically $800,000. Can you go to the next slide? So the way that we often recommend funding this is often we're going to basically look to raise the 700,000 against the personal home with Bank A, and then just raise a small amount of debt to complete the purchase with Bank B holding the trade property as security. The reason we do this is basically what banks do is if you discharge properties these days is they want to put you the whole way through a mortgage application process, where if we do it this way, what happens is you're going to sell the trade property, and if you can move to the next slide, what we can then do is you're going to basically get all the trade property sales. You're going to basically have a revolving credit facility of 700,000 that you can take the sale proceeds, pay that down, and then have it available for moving forward. So this is a good way. Revolving credits have kind of got harder to get over time. Sal and I back in the day would have just gone to a bank and just got a big revolving credit. We can't do that as easily. By doing it this way, while it looks like we're loading the debt on the family home, we do this for your first trade. That then gives you a large revolving credit facility. And then moving forward, you've got that there if you want to basically have the ability to buy a deal really quickly. But moving forward, we're only likely in most cases to take the minimum possible from the revolving credit, but it gives you a big fat revolving credit to use to move forward with. Can I get a flip forward a slide? So a lot of you, if you're buy and hold investors, you'll find a change moving into the non-bank market. We're always going to try and basically find the cheapest funding possible for you. Often, basically, people, when they move from buy and hold into trade funding, one of the reasons they do it is they want to keep growing a buy and hold portfolio, and they can't do it for some reason. And often, it's, especially we've noticed in the last few years, is they can't meet the bank affordability rules. So what they want to do is look at getting into property trading as a way to kind of keep moving forward. So we've got a myriad of lenders. We've got about 30 non-bank lenders in total that basically we deal with. And it's worth understanding that when you get into this side, understanding trade funding is different to understanding buy and hold funding. Yes, in all cases, you want to get the cheapest funding possible. But when you're looking at a buy and hold, what you're generally looking at is understanding, I suppose, what I call a basic profit and loss. You're wanting to basically understand the cash flow from a long-term investment. When you're looking at a trade or a development, you need to basically work your numbers back. So what you want to look at, I suppose, is what is the profit you're ideally making from the trade. Basically, you look at what you can sell the property for, and that basically then determines, I suppose, what you should buy the property for. And so effectively, in a lot of cases, is that then means if you can't access bank funding, you might need to use a non-bank lender. And if you're using a non-bank lender, then this is just basically another line item in regards to the expenses that you might need to pay to get the deal across the line. Now, while we often may use banks for basically trade funding, they don't really like it because they're more basically there for longer term funding. We use a lot of non-bank lenders for clients who can't get bank funding, but these non-bank lenders are much better at pricing, I suppose. Well, when I say much better, you won't look at that as a client. They more understand how to price for it, and they more understand that they're going to be a short-term funder. So because they understand they're a short-term funder, what that means is they're more likely to basically charge fees. So you'll see basically fees there for a lender. And also most of these lenders won't basically pay the broker a commission because it's going to be very short term. So a mortgage broker will generally charge a commission basically on this. Whereas if you're doing a buy and hold, the bank probably pay that and absorb it into the long term, I suppose, deal with the mortgage staying on the books. Now, I've got to run, so I apologize for this, but for those of you who might look at this and go, well, this looks exceptionally expensive, I do want to finish off, and can you jump onto the next slide, Sal? So this is a good mate of Sal and mine, and that slide we used before, that was not the actual loan for this property, but it was the same lender. I couldn't actually find the loan offer when I was putting these slides together last night. So this is an example of a deal that this client couldn't access bank funding. Banks would not fund this property anyway with the state that this property was in. But if you look at this here, this property was picked up for $190,000. The client spent $120,000 on renovating it. To give you an idea, they went unconditional on the 6th of June, settled on the 20th of June, had a full reno job from, do you want to flick back to the previous slide quickly, Shal? So yeah, this is what it looks like on the 20th of June. This client's got a full-time reno crew, pumps through it. You want to flick to the next slide again, Sal? 4 weeks, and they basically have unconditionally sold it on the 20th of July, and that's what it looked like. If you look to the far left of the photo, you can kind of see the kind of still condition of what parts of the property next door look like. And so just repeat the numbers again. Purchase price 190, reno 120, sale price on this was 440. Okay, so 30% basically profit margin in this. So this person here is very used to using non-bank funding. So don't look at non-bank funders as something which basically are your enemy. We're always going to use bank lenders if we can, but basically they can be a way of basically getting solutions across the line if you can't. So I've got to run. Sorry, Sal. Thank you very much for
Thanks for that, Chris.
having me on. I'll just sit there and say, and I do apologize everyone. I've got to be so quick tonight. If anyone does have any questions on trade funding, let me basically know. And I work a lot with basically the GRA team and happy to work in any way to make basically what you're after work.
Yeah, and if you want to get hold of Chris, that's his QR code. You can and his contact details. So email Chris and he'll organize that. So we had to drag Chris out of a presentation. The reason we did that was because we wanted to let you know there is a product available for a limited time to get this massive cash back that Chris can organize. And also there's 15% deposit requirement, Chris. There's another product at the moment.
Oh, ANZ's, yeah. So the banks can start doing some 80% investment lending.
Yes.
In some cases, ANZ said they may go up to 85%. Yeah. Yeah.
And so those are only limited products, right? Once they've run out of
Oh,
money.
yeah. If they run out of money, they're done. So it's very
Okay.
limited. So for those of you who are short on deposit, give me a call ASAP, flick me an email, and we can have a talk on it. If equity is holding you back or loan affordability is holding you back, flick a message. What we do a lot of is basically arrange a time to do a review of your situation, and then we can have a discussion on the best way to find solutions.
And also, if you've got a house with, let's say, 20% equity, if ANZ is ready to lend you at 15%, you could get the 5% back as an overdraft facility or an offset account. So again, get hold of Chris and make use of these products. When these products come out, guys, make use of them because they're only there for short term. And that's something I'll learn to do very fast, and it does release a lot of working capital. Thanks, Chris. And
thanks, mate.
Thanks. See you. Bye.
Thank you. Bye.
Now we're going to jump onto the next slide about back onto property trading, guys. So now we've got Then talking about his property trading activities.
Thank you, and that was nice of Chris to give us a breakdown because a lot of the time, when you're starting off, people don't take into account the extra fees that you get from a second tier lender, and those add up into the margins as well. So you got to make sure those numbers are accounted when you're looking at a trade deal. So here's an example of a trade that we've done actually last year, and I'm just going to share some that we've done in the past to give you an example of the transformations and the profits that can be achieved from. And now it is a great time to get into trading because the market has stabilized and is growing and moving forward. and there's more interest in properties. So best time to go and buy. I mean, at the right price. So I'm going to be start looking, and I'm sure all our clients are also already on looking for the next deals, whether that's to trade or to hold. But it's a full transformation. So this is the one that we've done in Great North Road. Full renovation inside, out, a bathroom, kitchen. Was actually convert the 2 bedroom into a 3 bedroom, added an ensuite to increase the value. And as you can see, the purchase price was 526. We spent about 175K in renovating. And the reason for that was it had issues with CCC and title, which we had to get involved in rectifying it. The sale price was 810K. Um, and we made the thing here is that we made an actual profit of 20K. And the thing to worry about here is that the defect title cost us more money. So
Yeah.
in the sense of, originally we thought it was just updating the flats plan. But once we got into more details, Auckland Council wanted us to, go in more details, get a geotech report, get a flood study on this property, even though the planner and the architect that we were dealing with, this is outrageous because this doesn't require, but council being council saying, hey, this needs to be done. And that's, additional cost that we didn't allow for. So the key learning here in this deal for us is that, make sure that there's enough margin so that it doesn't eat through your profits. Because, if you had a smaller margins on this deal, what would happen is then you would have made a loss, and that would then not a good feeling for anyone. So good one thing to look at when you're looking at cross lease titles. Check the title, pay a lawyer, and make sure that the flats plan are as what you see on the title, and just do your due diligence properly. And the reason why we're sharing this, or I'm sharing this with you guys, is that not all deals are that great, but in the sense that you can make mistakes, we make mistakes, but learn for it, but allow enough margins so that it doesn't push you backwards. So that's the reason why I wanted to share that with you
Well,
guys.
the other issue with this side, if you can go back and show the house, was
Yeah,
we bought the property on a market that was going downwards.
that's right.
Yeah, so it doesn't matter what work we did to the property, the buyers couldn't see the property above 810. We actually gave them a property that was fully run down to probably a Taj Mahal.
Hmm.
We did it up at that top spec level, and the market kept going backwards, backwards while we're doing this property up. That was one of the reasons. Second reason was, like Then said, we didn't take the issue on the title seriously.
Yeah.
Being experienced property guys, we relied on our mates, who was probably one of the agents, and said, mate, that's only going to cost 5 or 7 grand. And we took his words for it. And, so we still came out making money. We didn't lose money, but we probably lost good 80 grand of mucking around and from start till end and time, money cost and everything. So we lost 80 grand. So instead of coming up with 100 grand, we came up with 20.
Mhm.
But again, it could have gone the other way, right? We could have lost another 80. It could have been negative 80. So the importance of buying it right, you make your money on trading properties the day you buy the house because you bought it
Yes.
well, right? So we did that, but we
The other
didn't watch the defects.
Yeah. The other thing is also, I mean, we would have got a registered value at 875 to 900K, no doubt. But, we weren't, our intention is not to hold on to that property any longer. We took the profit and move on to the next deal
Mm.
because, the longer you hold and when a downfalling market, you're going to be losing margin. So we took, that was a lesson, and and now we look at titles very carefully
Oh,
when it comes to cross lease.
yeah. We check everything and we listen to our lawyer and not our mates.
Yes.
That's very important. Now, what Then's going to talk about here is a multi-dwelling site, and I'm just going to take you off topic here for a little bit. Multi-dwelling sites are amazing rental properties because for the same configure, same site, this was about 700 meters square site. You get a second dwelling that's rented as well. Anyway, if we bought this and traded this, then do you want to run the numbers? And the numbers, even today's market, they work. And this property is a gold. Then do you want to run those numbers now?
Yeah. So this one we bought was bought at auction and was bought for 1 what was it, 1.370. We've subdivided it. So it was a home and income, 4 bedroom in the front and a 3 bedroom at the back. And most of the work that, or the money that was spent is splitting the title into two, so that it could be sold separately. One of the properties we sold privately, and the other one we sold it using a real estate agent. So the sale price combined was 1.8 million. The cost to us in dividing this, doing the subdivision and holding it for 6 months while we did this. So all up from the purchase price, spending 50K, legal fee on it was $8,000, the marketing fees, the real estate agent. So all up, it cost us 1.495 or just over that. And we sold it for 1.810. So that's a profit before GST and tax of 314,510 $10, sorry, not cents. So that's a great deal. Properties like this, Salesh and I, we will jump on it immediately, because there's value in it, as a trade, as you can see. And there are properties like this in the market. We see it when we see our clients and everyone else that's part of it, doing it. And the other thing is like, not all of us have this sort of money sitting there in order to do a deal like a trade. And, my journeys of property investing and trading, I had to get along with other people and do JVs. And so what I mean by JVs is joint ventures. And here's an example of a client that we helped do a joint venture together. So these are two individual clients, and this was back in 2020, where one had the skill set to go out and get the property and do the deals. The other one was just working on a high-end job that didn't have the time to do any due diligence, but had the money or the deposit and the renovation money sitting in their account. So Blake found the deal, and he ran the project. And then we've got the other JV partner to assist with the purchase. So Mary funded the deposit and the renovation costs. Once all it was done, they divided the profit and shared it. So this was in Lower Hutt. Yes, we were in Auckland and we assist them with the numbers. And so this is the before photo, and it's a tidy brick and tile house, fully renovated inside, and this was the number. So purchase price 435, renovation was 65,000. The marketing fee, which is the real estate agent fee, was just over 17,000. Lawyers' costs, settlement costs, interest, everything all up added up to 532,000 or just above that. And they ended up selling up for 647,000, just over that, and made a profit of 115,000 before GST and tax. So they take away before tax about just under 50,000 each. One pretty much, got paid for their time and effort. The other one got paid for for the money that they've invested in the deal. So now these are things that, two business people or two friends can get together, and just making sure that they have a mutual understanding of what they're getting into, and how the profits and everything is going to be split each way. Salesh, how would someone be able to get started if they're interested in trading?
Well, firstly, guys, if you are interested in trading, you get onto our GRA Property School seminar, which is basically it's an online recorded version of a supply chain of who you should be dealing with when it comes to property trading: the bankers, the lawyers, the accountants, and real estate agents. So that's what we recommend you to do. If you're already in property school, you probably have that supply chain. So start making use of this now, because the market's doing this. Remember, it's going up, right? So you got to get onto property trading now if that's what you wanted to do. Now, also, I'll probably suggest is you make an appointment with one of the consultants at GRA, so you have the right structure in place. Now, I'll just quickly talk about structures, right? I hear a lot of lawyers out there telling their clients, you don't need a trust, right? Guys, forget it. You all need a trust to put your family home in a trust. You need to secure your business as well. Recently, a mate of mine has been sued, not on property trading. He's got a property portfolio. We've structured that properly. We structured his family home. He's got an extremely big business, and one of his staff didn't follow the health and safety rules. He got fined 1.5 million, and it's currently being negotiated. He's going to write a check out. He can afford to. But there's guys out there who can't afford to. So do not listen to anyone that talks about you don't need a trust. Everyone needs a trust. Simple as that. He never in his life doing business for 40 years, so being sued for such a big amount. So, and now he's worried that what happens if there's another issue, another issue. They've got over 60 staff. So, very important, guys, have the right structures in place. It doesn't cost much money, right? But I can tell you, if you had to get a lawyer, it'll be 900 plus Gs an hour to fight yourself. Um, the biggest thing here is obviously we have to negotiate and make sure he gets a clean name. Even though he wasn't his era, he was staff's era, he was at home, but the directors get in trouble. Um, you also go out and get sound and robust base of knowledge, so which is basically property school. Get some ideas there and get the supply chain, get it going. Um, and also with property school, there is a whole module on property training. It talks about how to do renovations, project management, costing, how to do CMA or market value assessments, and there's other tools that we use as well that we show you in property school. Um, Very important. Set the right structures. I just talked about that. Family trust, business trust, holding trust to hold shares in your businesses, stuff like that. Set up your finance with Chris Peterson. He is very knowledgeable. Use him to your advantage. I use Chris in 2000, since 2010. He's a smart guy. He knows how to access money. And you need a banker like that. You don't need a banker you call and have a yarn and they go, no. You need a banker who goes, oh, I might not be able to make it, but I'm going to give it a go. And so you work with him to make it happen. And then you also get individual support and guidance through GRA. So you've got Maggie and Then available there. So if you're buying a trading property, you're not sure about anything, call them. Now, if you're not sure about GST, like I said, if you get GST wrong, it costs you between 150 to 200 grand minimum, right? That's not maximum, minimum cost. So just pay someone for an hour to review the contract to make sure everything's done correctly. So there you go. That's just to get you started. But we're big time supporters of property investing and trading. So that's what we like doing, and our clients are successful. There you go, Then. Yeah.
I mean, we talk about what we've done and what, deals that we've been part of. But, I think Maggie, I think you'll be the best person to come and share the next slides where we had a client that sat with us in a seminar like this, and then came on board to do our property school. And, she came on board, saw what we've done, and pretty much, not reinvent the wheels, and just went and said, look, if you guys can do it, I can do it. I just need to make sure that I find the right deal and run it past you guys. And we were privileged, we were happy to, assist her, and to see the success that she's gone through in doing the deals that she got onto. Maggie, do you want to share those details, or over to you?
Yeah, excuse me, frog in my throat. Very much a team effort with Dan and I both helping this particular client. So for her first trade deal, she managed to secure a property for 426 and negotiated in that process almost 17,000 discount on her original purchase price. Budgeted 50,000 for renovations, ended up spending 44. So obviously this is a very small, simple home, 2 bedrooms, so we don't need a huge renovation budget. Assessed value at the end at 565 and got it under contract to sell only 3 months later for 570,000. So the buyer then had a building report done, a few minor issues popped up in that, and they negotiated in turn a $7,500 discount from that contracted sale price. This particular client is using cash, so we don't have to factor in any loan or interest costs. And then on the first simple, quick little trade, 60,000 profit before tax.
I think the important thing that we must add is that this is in the last 6 months. It was
yes,
done.
very recent.
And then the exciting thing with this is, as soon as that was sold, I think the next day we got an email saying, I'm looking to go to auction on this property. What do you think? And I'm like, okay, yeah, you got the fever.
Exactly. This client, she's onto it. She's not wasting any time. So just before photos, the first trade. So yes, nothing particularly attractive about that little house as it was. And then she did a beautiful job turning into an appealing little home. So perfect first home or downsizing home for somebody, and just everything beautifully done. So no need for anybody to do any work on this lovely new kitchen and a lovely new bathroom. So straight on to the second trade deal, purchased for 500,000 in September. And she's budgeted 65 for renovations and 25 for the agent's commission, legal costs and holding costs. So that's paying your rates and insurance while she owns the property. Completed last month. Doesn't muck around with a renovation. Again, values assessed at 660 and very good chance that will be achieved in a sale, if not a bit more. And anticipating another 60,000 pre-tax profit on that second trade deal. And we're already in a rush to help assess the third property, which is going to auction tomorrow. So before photos on the second trade deal, I remember back in the day when peach was popular, but that's going some way back now. Not in a very appealing home. And after photos, so yeah, transformed into a very inviting little home for somebody.
Okay.
Beautifully done.
I mean,
that bathroom transformation's amazing.
Yeah. It's
Thanks.
going to be a late night for us, looking at the deal for tomorrow.
So guys, to all our listeners, make sure you get your questions lined up because we're going to start answering them. You got over $1,000 an hour free resources here. So make use of us. Abuse Then and Maggie, not me, with text questions. I'll avoid the text questions. Maggie and Then will take care of that. So just some recommendation, guys, and I've been giving the same recommendations for the last, probably 7 to 10 years, guys. Then Maggie, and I haven't changed. And one of the things we've worked out is, you talk to anyone, they'll go, I wish I did this 10 years ago, and then, the clients who are listening to me, 10 years ago, said the same thing. I wish I did this 10 years ago. So, guys, there's never a good time, but there's a short opportunity to make some money in properties. And that short opportunity could probably only last 6 months because immigration's open, people are moving in, a lot of money coming back, a lot of people they've moved to Aussie, a lot of them are coming back because it's not cheap to live in Aussie. They've realized that very fast. So like our student accommodation is fully filled now. Student accommodation is pre-COVID numbers, so that's a big tick. Our auction rooms are filled up. Our bankers are giving us cheap money, easy credit. It's going to take off. So there's a little opportunity to get in there before the market takes off, right? It's an upcycle market. It's going up. So don't do nothing. X sooner, not later. Really important. Get in there, get your appointments sorted, get your structures put in place, catch up with Chris, get your funding in place, and then start hunting for deals, right? And if you use lack of time, I don't have time, or fear is an excuse, well, too bad. Just look at your iPhone and look at the screen time you have, right? Then's got 6 hours a day screen time at the moment.
Lucky you have a Samsung.
Oh, he's doing 7 hours. The reason Tham's doing more time on his phone is because he was playing rugby and he broke his leg, right? And he's going to be out for 18 months. So you're more on the phone then?
Yeah, I mean, I'm what 3 weeks into surgery now, so I'm out for the next 2 months easily. Yeah,
Yeah.
but
But
it
you've
is what
been
it
down
is.
for what, 6 months already?
Yeah,
Yeah.
already, so bummer. But anyway, that's life throws a lemon, you make what? Lemonade.
So there you go. So yeah, Than's available and he looks at stuff for you so you can give you a hand. So don't use time as an excuse. Draw yourself a timeline, guys, with targets. So today is the 2nd of December. And it's our last presentation for the year. Yeah, we've done it for what, nearly 18 times this year. So we're gonna have a nice 2 months break from presenting. So, don't go out there and forget about this presentation. Think about what we're telling you. Draw yourself a timeline where you are today, where you're going to be in 10 years' time. Now, I can tell you 99.99% of you listening to me here have not worked that out, right? I worked this out at 26, that at 36, I wanted to be retired, right? At 30, I was retired at 30, right? And so I don't need to think anymore because I just do transactions. I surround myself with people like Maggie and Thin and Chris and they actually do the stuff for me because I send it to them and they analyze it and tell me, yes, it's a do or don't run away. and you'd be amazed the amount of time I want to buy a property and they're telling me to run away, leave the property alone. And so surround yourself with the right people. Don't listen to people who don't do properties. Don't listen to people who have not done litigation work, i.e., saving their client's business or family home, right? If a lawyer tells you a trust is not important, well, you ask them the question, how many times have you bailed a client out when they've got in trouble, right? If they say 0 time, well, don't use the advice from them. Go to a lawyer who's actually bailed clients out, and they'll tell you how to structure your assets properly. Remember, you work all your life to buy a family home, have a business, or other assets you own, right? It only takes a week to put a trust together and put your assets in a trust and gift it away and protect it from creditors. Also, think long term when it comes to property investing, right? Really important. So when you do property investing, don't think, oh, I'm going to lose money in 2 years or in 3 years, it's going to go nowhere. Well, too bad. Think about 10 years, right? That's when you see your properties performing. All the investors sitting over here, Than, Maggie, Chris, and I, we are all long-term investors. And once you go past the 10-year mark, you're like, wow, I wish I bought more houses 10 years ago. You agree, Than and Maggie? We say that all the time, right?
Definitely, yeah.
Yeah. So very important, guys. Get your thinking cap going. And then do you want to move to the next part? And so we do have our online property school. Now I can tell you this today we're offering this for $4.95. We don't make any money out of offering this property school online demand course to you. We don't. The reason we promote this is because we want you to get the supply chain. We want you to understand the language that property investors use, right? This is why we do it. And we also ask, if you've got questions, we'll help you answer them. And you also get 2 months World Suite access for free. Now that's a software we have designed to help our clients enter their financial positions and see where they will be in 10 or 15 years time. As part of signing the software, you also get access to one of those books from Matt. Whichever is your choice, you'll get it for free. But because it's our last presentation, you can have both for free, right? You sign up for property school, you can have it for free. And if you do sign up for a meeting with GRA, we'll probably give you a book for free because we do like to promote. So if you're new to GRA, you haven't been to one of our initial meetings, sign up, use the QR code, sign up for it, and we'll send you a book for free as well. As these books are informative, right? You get good information. It will help you grow. Sorry, Dan. Jump onto this. Now, guys, I talk about insurance all the time. Super important. Actually, I had my insurance review yesterday as well. And the first thing I looked at the guy, it was about health insurance. I said to him, mate, I want to have the top health cover for my family. Right? And he said to me, why are you in the second top cover? You're not in the best. And I was like, I just don't want anything to go wrong. That would be the best outcome. So I don't have to use insurance. But if anything goes wrong, I want to make sure the family is secured. Right. So guys, there's a company called riskdirect.co.nz and there's a guy by name of Steve Monroe. If you email them, they can do a free review for you on your insurance affairs and tell you what changes you need to make. They can't force and sell your product. That's not going to work for you. So, so you can use these guys to your advantage. You don't have to pay for their services. They'll review and tell you if there's any changes or no changes needed. And so that's good. So please get your personal insurance checked. This is as equally as important as getting a good banker on your side, getting a good accountant on your side, or lawyer or property finders. Also, insure your properties well. Some of you would have bought properties 10 years ago. You should insure your properties for replacement value. I'll tell you this now. We had that flood in Auckland 2, 3 years ago. Some of the properties were insured for 300 grand, but they were worth $1 million. It got destroyed in the flooding, and the insurance company just wrote them a check for 300 grand and walked away. So please look at the replacement value of your house, insure your properties correctly. A 3-bedroom, 90 meter squared house, brand new, relocatable, sells for about 400 grand plus GST. My mate recently sold a 3-bedroom, brand new relocatable house for 700 grand. Just the house, relocatable, right? It's sold in a heartbeat. So that just shows what it cost. That's without land. So make sure you have the right cover in place. Very important, guys. Take a photo of that website, that slide, and contact these guys and put your insurance in place. Now, we're just about to finish up, so get all your questions ready. Maggie's going to start answering them for you shortly. So if you do want an initial meeting with GRA, please scan that QR code and we'll organize the meeting for you for free. If you are a GRA client, you'd like a review meeting, scan it. We'll organize a meeting for you, and Amy will tell you about the charges. In this meeting, we look at asset protection, tax planning, or any other advice we think that might be relevant to you, and we look at accounting services as well. This is where we file your tax returns, GST, PAYE returns, and things like that. And if you've got any other questions or you need access to Maggie or Then, email Amy and she'll organize that for you. Maggie and Then are 250 plus GST an hour. Am I right?
Yes.
Yeah. Yep. So they'll help you analyze your property and look at issues or guide you through to the right consultant. They're 250 plus GST an hour, but it's money well spent. Maggie, do you want to run over those questions? So guys, have all your questions running. We're going to answer them now.
Anna asks, was the 30% profit a gross or net profit? Was it after the renovation costs?
I think that's to Chris one, I think, yeah.
Yeah, yeah. It's, normally when we say profit is after renovation and holding cost. That's what we refer to as profit.
Daniel asks, how long does the subdivision process normally take and what is the average cost? What factors impact subdivision time and cost?
Well, first of all, you got to make sure that it is subdividable, the piece of property that you're buying. And then there's other factors like how is it connected to services? When I mean by services, we're looking at stormwater and waste line, and whether that is on site or is it further down the line. So you'll have to get a CCTV done of the actual those lines. And then also looking at council as to, their leadway times into, getting paperwork pushed through and your planner that you're working with. Anything else that that I missed, Maggie, that you want to add on to?
Well, there's really just such a huge number of potential things that impact both the time and the cost, and whether a property's even subdivisible in the first instance, because there's a lot out there that appear so, but on investigation discovered not to be possible to subdivide or at such costs that it's not profitable.
Mm-hmm.
We do cover in property school, we start covering development, especially for investors. And then if you're seriously interested, suggest that you do GRA's development school as a starting point.
Yeah, and look, if you do find a property, it's got multiple dwellings and you're looking at subdividing, get it under contract subject to due diligence, and then get a planner to give you a price, or people like Then or Maggie to guide you through the process. And that would help you, because then we can analyze and give you a rough number you're looking at. Plus, if there's complications with like stormwater connections, stuff like that, they can be identified.
Exactly. And if it turns out that it's a bit of a dud, you can renegotiate or simply cancel the offer, as long as it's a conditional offer that allows you to do that.
Yeah, funnily, I was helping someone negotiate buying a business this week, and then we worked out the cost of replacing one of the assets was about 60 grand. So we went back to the owners and said, can we share the cost? And they've agreed to it. So they've agreed. So it's just a matter of asking and making it happen, like Maggie said.
Yeah, exactly. Chris says, what tips do you have to keep main renovation costs small? For example, paint, kitchen, bathroom.
I presume he's saying keep it tight.
Yeah.
Yeah.
About not overspending, presumably.
Well,
I guess
then I'll probably say don't replace the kitchen, paint the kitchen.
I mean, it's a vague question, but I mean, the thing is, fit for purpose. Are we looking at a 5-bedroom house? Are we looking at a small unit? But don't try to skim over it, because you have to do the job correctly, or the renovation, because if you're looking to sell it as a trade, a home buyer comes through, and if it's a shady job, they're not gonna, fall in love with the property. But also, what else is the competition? What other properties of similar conditions out there selling for, so that you can say, okay, if I do a little bit of work or make it livable, then this is what I can achieve. So as long as the profit margins or the numbers stack up, you could afford to spend 20 grand, 30 grand to get it up to that spec. But I would start off, if you see a property that you could add value by doing a renovation, look around in the area to see, what sort of tidy properties are, what are they selling for? If it was slightly upmarket, what would they sell for? And then you can go back and work out what your budget would be to bring it to that, scale or scope of work.
And quality that's appropriate for the location, I
Correct.
think is another one. So if it's not a very high cost location, there's no need to put in the best carpet, the most expensive curtains, or copper bathtubs, for
You get
example.
downgrade from Kmart to warehouse.
Yeah. And equally, if you're in a high value area, you won't do well if the renovations are a bit cheap and nasty because the buyers won't be interested.
Yeah, and with renovations, you make your money on the day you buy the property. So if you've done your numbers, you've worked backwards, you know what you're going to spend on the renovation, and you've bought it well. You just make sure you do a good job, you know?
We go through renovation and property skills, so if you are not sure, I would recommend to give that a go, and you'll get more details on type of renovations that required for trading and holding and so forth.
Yeah, property school's great for your foundational knowledge, and then we can help individually on a one-on-one basis when it comes to actually implementing that. So another question from Alana: how do we avoid the profits being erased by tax? When and how much does capital gains tax become a factor in these situations?
So Alana, I'll just make one thing clear. The way I run my property business and any of my business is I never care about the tax bills because whatever money you make, so if you make 100 grand, your tax bill will be $30,000, right? If you make $1 million, you're going to get a $390,000 tax bill, right? And it's simple as that because the more you make, the more tax you pay. Now you must be thinking, well, where am I going to get the money from? Well, when you make 100 grand, you're going to get 100 grand sitting in your bank account. So you can put 30 grand aside. You don't care at this stage. But if you don't have the money, you will get nervous about it. So the day the property sells, you made your 100 grand, you can put your 30,000 aside. If you made $1 million, you can put your 390,000 aside for tax, right? So always work on your profit number. Don't work on saving tax because that's the next part. Once you've banked the profit, is to look at minimizing tax. That follows. So you don't get stressed about tax, right? So really important. That's how I function every day. I never care about the tax bill. All I care about is my profit. And then your next question is when and how does capital gains tax become a factor in these situations? Well, you only get tax once. You're either going to get income tax, buying and selling, or you're going to get caught under bright line tax, which is capital gains tax, right? So you only get tax once. So whatever your tax rate is on the day, that's what you're going to get.
I guess
If
when
you're
you're
trading, you'll be paying the income tax.
Correct. But you won't then get done for capital gains tax because you only get tax once. Yeah.
Taylor says, how much at the minimum should one aim for profit on a flip?
Well, we don't do anything that drops below 20%. We are very strict about it. It has to be over 20%. So if we do muck it up, for whatever reason, we still got a margin to play with and sort ourselves
Exactly.
out.
You've got to allow for those unexpected costs and things that happen that you didn't foresee. So at least you can get out, hopefully without a loss or at least a small profit.
Exactly.
Jessica asks, is the trust tax rate 39%? How to minimize this if you're single and have no family in New Zealand?
So what happens is if your trust makes profit, we call it, you got two options, either to retain the profit in the trust and pay 39%, or you distribute the profit out to the beneficiary. So in this case, we'll probably get distributed out to whoever the beneficiary is, even if it's one person. They'll get their profit distributed out to them, so they'll pay their lower tax rate. It's called beneficiary distribution. We do this all the time. And most families, they use trust and they distribute the income out to their family members. The trust is important if you've got a risky job. So make sure you have a trust that's put in place, or you got any sort of creditor they need to be aware of. So you use a trust structure, but all the trusts are customized to the client's needs. You know, if you're a mum and dad, you just got a normal job in PAYE. So your assets could be, your family home could be owned in a trust. Your rental properties could be held in a company. Things like that.
How do you identify a good or bad agent in the regions?
They all are good agents. We don't call them bad agents. We never do that.
Depends if you're buying or selling, isn't it? If you're buying,
Well, yeah. Well, you
you
want to
might get a
buy.
better deal out of a more
Yeah.
challenged agent.
Well,
I
if you're selling, you want the top agent in the area
Mm.
selling for you.
I
When
think
you,
it would be no different to identifying the right agent in the city as well. So the good agents are the ones that dominate the market, that have the largest network, and then they've got lots of listings and lots of people attending, prospective buyers either coming to open homes or contacting them about properties. Because if you ring up about somebody rings up about one and that's not quite right for them, they can move that buyer onto one of their other listings that will be more suitable for them.
mm,
I guess for me, I think one thing that worked is it's about building relationship. And once you start talking to them and build that relationship, you could then sooner or later you will find out who you gel with, who's the great agent that works well for you, and who's that does work well for you. And that way you can make that that person I'm gonna love to sell with because they're going out of the way, they're getting these comparable sales for me. They know they know the properties or they know the area or the region because off their hands, they're like, that property sold for this. These are the comparable. Then you go, okay. And it's all about relationship. It's not like you could go online and say, that person's good. That person, oh, not so good. Because yeah, and sometimes someone that I find that's good for me might be bad for you, and vice versa. So it's about relationship because they are people.
Mm. And their competency or lack of it will soon become evident as you're talking to them, just as you said, then.
Mhm.
And if they're not providing you with good service, then it's not unreasonable to assume that perhaps when you come to sell a property, they won't be providing your prospective purchasers with good service either.
mm.
Uh, what is the minimum spread you usually look for between purchase price and resale?
Well, normally, like we said, we aim for minimum 20%. So based on that, we work backwards. So if you want to work out your selling price, we work backwards. What's the purchase price? What's the renter cost? Because you can work out your true renter cost. Roughly, you can look at a property and work out your true renter cost. Renovation is expensive nowadays. So be very careful, not to understate your renovation. And then you work backwards and then you can work out your purchase price. And that's basically how you do it. So there's no actually a percentage or anything like that. It's based on what you bought it for, how much you're going to spend, and you're looking for 20% margin.
Exactly. So the two key things you must know is what it's going to sell for and what it's going to cost.
Mm.
And then that gives you your purchase price. Bronson says, from a flood hazards perspective on investment properties, is it still a numbers game? Assume lower margins versus risk, or just never look at it?
I'll answer the
Yes.
question because I've
Yeah.
been dealing with the mess on this. If you do buy a flood damaged property or there's property's got flood issues, please do not go unconditional before you get your insurance company to check it. Because if you can't get insurance, you cannot draw the mortgage down. It's simple as that. Be very careful of that. So if it's got flood issues, call the insurance company and say, I'm looking at buying this property. Would you insure us or not? If they say no, walk away unless you're cashed up buyer and you're going to work out how to fix it. Uh, it is definitely a numbers game. If you know how to fix the problem, which sometimes Than, Maggie, and Matt and I work out how to fix it, but it could, we could spend 120, 130 grand fixing it, or could spend 30 grand fixing it. Sometimes you just need to put extra catchments in. It's okay. I recently I did up my house 2 years ago, and I got my drainage guy to dig in and put all extra catchments in place. Not that I needed it, but I just wanted to have it on my site because you open up the site once, so you have it, and you spend good 40, 50 grand on it. It's the best investment ever. and so always put catchments in place. It's just one of the rules I have. I don't want water around the house. And now my neighbors are coming around to say thank you to me because none of the water is ever going to their house because my property is a little bit higher. So they said, whatever I did, they don't get flooding. So it's just a matter of fixing it up. But yeah, be very careful with your numbers and everything else.
You'll have very happy neighbours if you stop their properties getting runoff water into them. I think a really important thing to remember is if you purchase any property with potential flooding on it, is that it will be difficult to sell or will sell at a lower price in the future. And could, even if it's insurable at the moment, potentially could become uninsurable or very expensive to insure in the future if the flooding issues continue or get worse. He also asks if PC 120 changes anything in relation to this question. Sounds like a question for a planner, really.
Yeah, town planners, definitely.
Getting quite detailed there. We could recommend Sentinel in Auckland, Sentinel Planning.
Yeah.
Alana says thank you. She appreciates the tips. Cam asks, if you are buying an ex-KO house to flip, is there any special consideration around GST?
Yeah, so Cam, you've got to be very careful. If you're buying a house from a KO, they are GST registered, which means if your intention is to flip, the chances are the IID can disallow your GST claim. As an accountant, I'm not going to sign off that advice to tell you, yes, you can claim GST on the property. So it's definitely not covered by insurance. So I'm not going to sign that off. And most of the lawyers won't sign it off. They'll tell you, go and talk to your accountant because KO makes it very clear that they are GST registered. And under the GST rules, then that means that the chance of claiming a GST back from IID is nil. Right, so be very careful with that, and I suggest you get customized advice, and we can probably guide you through to certain options that there might be there for you to look at.
Because that mistake could cost you your profit margins.
150 to 200 grand, easy, minimum. That's your cost. So you got to get the right answer, the right structure in place before you hit the button on unconditional.
Kelly asks if you can clarify the bright line versus income tax you mentioned. Do you have a property income tax structure first so as not to incur the bright line? How does all that work?
So Kelly, what you got to understand is you only pay tax once in NZ. You don't pay tax twice. So income tax is one kind of tax, which you can probably say is capital gains tax. So let's say you make 100 grand on a property, right? You get charged $30,000 because your intention was to buy the property, do it up, and sell it. You made 100 grand, you paid 30,000 in tax. Now, bright line means you bought a rental property with the intention to hold it as long term. In your first year, for whatever reason, you're being forced to sell, and you made 100 grand. Under bright line rules, which means you will have to pay tax on the profit of 100 grand, which say equates to 30 grand. So they're two different kind of tax. Right? But you only pay one tax. It's either income tax or bright line. You don't pay both. Right? So those are the two types of different tax.
Yeah, and the thing about trading is that it is a business activity, isn't it? And so therefore it's subject to income tax, just as you would be if you owned a hairdressing salon or a retail shop.
Yeah, so that's subject to income tax because your intention is to buy and sell the house. Right? But Brightline is subject to your long-term holds, but you've sold it within 2 years. That's when Brightline kicks in.
Is a development site that's in a flood zone worth buying?
That's a town planner's question. Definitely not my question. But I'll say check with your insurance company before you buy that site.
There's a lot of engineering and planning technicalities about properties in flood zones. If it was a simple yes/no question answer, it's probably no, not worth buying.
Yeah.
But not something that you could necessarily know without lots of detailed investigation. And what is the best way to find off-market deals?
Basically, the best way to find off-market deals is talk to agents, give them a call, make friends with them, and tell them that you're looking for off-market deals. If something comes up, let you know one way, or get property finders going for you. Property finders are great, when they find me properties, I'm happy to pay their fees, It can range between $10,000 to $30,000. But look, if they find your property that's 200-300 grand discounted, you'll happily write them a check for $30,000, because property finders can spend a whole month and not find your property, or 6 months to find you one property. So that's why you got to pay for their time. But that's how you get off-market deals. The other way to get off-market deals is basically talk to family and friends and tell them if they can find your property, you're happy to give them a cut. That's another way of doing it. But fantastic. I think that was our last question. Unless you guys have more questions, we'll hang around for 10 more seconds before we disappear. But this was our final presentation for 2025. We look forward to 2026, and thank you everyone for listening to us. We'll look forward to seeing you a year older in 20 days.
And I'm hoping to look walking properly next in
Yeah,
26.
that's good. Good then. You haven't put on any weight, so that's good.
That's the filter.
Stop sucking your cheeks. Thank you guys.
Hard to stay slim sitting on the couch eating snacks.
Thanks, guys.
No worries. See you
Good
guys.
night.
Yeah,
Bye.
bye. Thank you, everyone. Bye.